Wow, just this morning we got producer price numbers, and JPow had a big message for us, and I think he gave us a hint as to what we should be expecting for tomorrow. This is a pretty big deal, so let's get into exactly what happened this morning, what Jerome Powell just said, what to expect going forward, and how this could affect your trading and potentially long-term investing. In this video, I'm going to go through my strategy going into CPI as well to give you a bit of a preview of what's going on. Keep in mind, just this morning, I sent out an alert at 7:48 a.m., which puts you right here on that, let's go ahead and, there we go, puts you right there on the Tesla chart, and we played calls all the way up to that 178 line. When we sent that alert out, we were able to pick up almost $69,000 on that Tesla and that Spirit trade. We do have an expiring coupon code on those trade alerts in the program on Building Your Wealth in the Stocks and Psychology of Money group coming out tomorrow at 11:59. That'll expire. We did send that alert just so you could see it. Now keep in mind, this is California time. We sent that alert right there at 7:48, which aligns, since my Weeble's on Eastern time, which aligns, and I gave a full description there, I'm just showing a little preview there, which aligns with my alert right there, 10:48 Eastern time, 7:48 in California time. So we played these lines pretty nicely, got out at about 178. Let's go! All right, so now for the summary. So PPI this morning came in hotter than expected. JPow was asked about it, and he indicated, hey, look, it was actually pretty mixed. The reason for that is some portions came in hot, and within, that's the services section, came in a little hotter. 3/4 of the increase was due to services, and we got a little hotter than expected read in the April data. We had an over expectations month over month and core month over month read, but the downward revisions from last month were actually greater. So we beat by 0.2 on the month over month, but came down by 0.3 on the prior month. And then on the core month over month, we beat by 0.3, but came down by 0.3, which is sort of balancing this out, if anything, somewhat to the dovish side. Now, Jerome Powell, when asked about this, called this data mixed. Now, what's interesting about this is he's asked, hey, what part of inflation concerns you? And this I thought was very interesting. He said that really, you don't need all three of the buckets. Remember, goods, housing services, and non-housing services. He says we don't need all three of those to actually come back down to 2%. This is the first time he said this, and that's the moment that I went bullish. When he said this, I went bullish, because once again, he started washing his hands of higher inflation data, which that might be short-term medicine. Maybe he's just propping us up to let us down. In fact, I think my "this time is different" count, he said this time is different like 3 or 4 times during this time. We'll talk about that in a moment, but what he really did, so, maybe he's setting up false expectations here, right? But what he really did is said, the PPI data was mixed. We'll see what CPI comes in tomorrow, but we still expect some progress on inflation in the second half of the year. And we're going to need more than just 1 quarter of data to see what the trend of inflation is. So think about what he did there for a moment. He washed away the entire first quarter going, 1 quarter doesn't make a trend. Look at how dovish he's trying to be. He washed away the entire first quarter. This morning he's like, the revisions were good. It was pretty mixed. Not a big deal. We're going to need more data than that. And then when he's asked about, rates basically potentially going up, he suggests, very small probability. He does say, I don't want to give up on it yet. Now, I thought that was interesting because it does somewhat imply that there's a little bit of him that says he might have to flip on us and U-turn and go Paul Volcker. That's kind of why in my trade alert that I sent this morning, that almost $69,000 realized profit, right here, I wrote 80% bull, 20% hawk. The 20% hawk that I wrote on this post is because Jerome Powell gave this hint that I haven't heard him give before, this, I don't want to give up on it yet. So he's really confident that inflation's going to come down. He just believes it's going to take longer. But I want to be clear, when he says that you don't need all three of those buckets to go down to 2%, to me, I thought that was really interesting. That was breaking with the tradition of what markets have thought, that you really want all of those buckets at 2%. He's really trying to say, hey, if we have, housing, non-housing services inflation running at, say, 3%, and goods inflation running at negative 1%, and housing services at 0%, well, then we average to, let's say, 2%. The math might not be perfect there, but you get my point. The point is, if you can average out to 2%, then who cares if services are running a little hot? That was another way of washing this inflation data. And that's really weird. I don't know if it's sustainable. Now, keep in mind, obviously, we're in the middle of a meme rally. We've got, I've actually posted the short interest on ehack.com. Just go to ehack.com. I posted all the short interest for today that people have been interested in. SunPower at 95%. This doesn't cost any money. This is totally free, right? I like to be transparent. Yes, the courses on building your wealth with the expiring code tomorrow, those cost money, but you only pay for those once. Some people have been in those for 4 or 5 years now, and they get more value every single day. But anyway. SunPower 95% beyond, Meet 41%, EVgo 31, Plug 28, Run 24, Lucid 31, Virgin Galactic 30, Laser 30, Carvana 28, Spirit Airlines 27, Microvision 25, GameStop 23, Tupperware 23, Rivian 21, Fubu 21, AMC 19, SoFi 18, Tilray 14, Clove 13, and DJT 9.3% short of as a percentage of float over here. So you're going to see some of this data over here on ehack.com. You're welcome to scroll through this and see this. But you also see some of my notes from JPow. But let's keep going, because I'm also adding more sort of opinion here in this video to add to the facts of what JPow said. So that way you get some more contextualization. So I've personally been concerned about the labor market. The labor market's been a big source of concern for me. It's something that's made me nervous and uncertain, mostly because I'm seeing more people get laid off and then having trouble getting new jobs. We're seeing job openings roll over. Jerome Powell says we're back at 2019 levels of labor market tightness, which he says is good. He sort of cheers that we have 27 months of under 4% unemployment, which, in fairness, it's really good data. He's absolutely right about that. Says we have a very strong labor market, rising spending, households are in good shape financially, we're not over-levered. He says consumer spending has held up, business spending has been strong, large immigration, they're consuming and working, boosting growth. The labor market is very, very strong, he says. A little typo there. There we go. Labor market is very, very strong. It's coming into better balance, though. And so he sees it sort of cooling, but he calls it a gradual cooling. Some of the things in the labor market that I've been seeing have personally made me a little more nervous, but maybe I'm being too bearish. And so I have to be real here. When I listen to JPow, he definitely seems more bullish than maybe I have been. And so this is why I also like to, when I heard this bullishness, I'm like, I'm going to buy some calls. And I'm glad, 6.9%, I'm going to take it. I'm going to pick that up and put it in my pocket and go, thank you very much. But anyway, on inflation, higher than expected Q1. He does say he did not expect a smooth road, but inflation was higher than expected, and we'll have to let restrictive policy continue to do its work, basically. And so the big message here from JPow is we can really expect to stay at these rates for longer, that we don't really need to hike. And even though inflation data has come in mixed on PPI, it's not something that's really concerning him at this point. Neither is the banking sector. Now, he did mention a few times this time is different, people locking in low-rate mortgages, and therefore this economy is maybe less exposed to some of the risks of being in a bubble, which he mentioned the word bubble as well. Part of that was due to the banking sector, and he said that the biggest problem in the banking sector is when you get a banking run. The Netherlands central banker was there as well. He talked about June being the tentative first rate cut and services inflation coming down finally, which, by the way, is good. Like, service inflation coming down in the Netherlands is good, because that probably does mean at some point in the long term we'll have global services disinflation, right? And that'll help us in the United States as well. But really, I think overall, this was a very bullish JPow. It could have been a lot more hawkish. It's not a surprise to me that we kind of started seeing the market move up after that. And going into JPow, we had nervousness, right? So opening statements, you get this rally. Oh no, JPow's starting to talk about inflation. Market goes down. I entered my calls right here at 10:48 Eastern. I sent those alerts. At 10:48 is when I sent those alerts. And you can see here there are a few minutes of sort of sideways. But then as soon as that event started coming to an end, that's when you started really seeing a run. Now, how sustainable that is going to be into the rest of the day, I don't know. I just really wanted to trade JPow talking, but it's possible we could also get a rally into the close. I don't think we're going to have a fall into the close. And you can see here off of that alert, there are plenty of opportunities here to close around 178. In fact, if you wanted to be perfect, I think I closed right about here as we were just hitting 178. That was my goal, run to 178. You could have actually held to about 179.50, almost 179.49 over here. But personally, I'm a big fan when it comes to trading that I go in with a strategy. I try to go line to line. And when I make a profit, I'm going to take a profit. I don't need to squeeze every single dollar out of a trade. The worst thing to have is the FOMO of oh, I should have sold there. I would have had more money. Because that'll leave you in trades too long, and then you might diamond hand a losing trade for too long, and that's when you really get smoked in trading. So just some sort of free trade advice there. But anyway, these are my thoughts on JPow. I have to say, maybe I need to reevaluate some of my sort of bearishness. But let me be clear. I still see cracks in the labor market. I still see cracks with household debt. BNPL, I think, is this sector, the non-bank sector that JPow is, he's aware of. He mentioned it too. The non-bank sector doesn't have that regulation as much as what he said compared to the regular banking sector. So he's aware of these. I don't know. I have to also be careful that I'm not getting too bullish just because JPow's bullish, but because he could flip very quickly. So I'm going to go into CPI tomorrow hedged. Now, the $69,000 basically we just made basically means all of my hedges could go to zero, and I think I'd still be up money, which is crazy, and I don't expect them to go to zero. But if we get a bullish or mixed CPI read tomorrow, mixed or better data is going to be bullish. The only way we really get bearish data tomorrow on CPI is if we end up getting... let's look at the expectations. We're looking at 0.4 on month over month, 0.3 on month over month core. You'd really need those to come in hot and the revisions not to offset that. So you'd really have to be CPI month over month like 0.5, core 0.5, and the revisions coming in flat, basically no revisions. That's really the way I think you would get a bearish day tomorrow. And I don't think a lot of people are hedging going into tomorrow. So I still think there's an opportunity to pick up some cheap hedges today going into tomorrow if you want to hedge your long portfolio. Hedges are a little different from a day trade though, right? Day trade, you're playing the lines. Hedging, you're really playing an event and you're trying to protect yourself from some downside elsewhere in your portfolio in the event you had some kind of correction. So, for example, I'm way more long than I have my hedge, but my hedge is also leveraged through options. To where if my hedge pays off, it'll pay out substantially probably more than the loss the overall portfolio would experience. So again, that's the nature of a hedge. So we'll see how the day goes. But CPI obviously tomorrow is going to be a big deal. There's a chance you get a rally into the close on the bullish JPow we had today and the mixed PPI data, which I think is a little bit of a hint that we're going to get a pretty basic CPI report tomorrow. But it's also something to keep in mind that the markets tend to have some fear going into the close before CPI, mostly because of the fear of the unknown. So keep that at the back of your mind if you are thinking about going bullish on the day. Nvidia's obviously gone from negative to positive. You can see that here. I wouldn't, there is a risk that while you could run towards the close, like the last bid into the close, sometimes you see a sell-off right before CPI. So if you're getting tendies on a run, if they come quickly, I'm a big fan of taking them. If you can milk them throughout the day, great, take them. BTC is sending a somewhat bullish signal, given that we're trending above that 61.7 line. This 61.7 line, everybody should have this one drawn. 61.741. It's not so perfect right here on the 1 minute chart, but if you go out on the 30 minute, it's okay. You got a couple rejects over here, a few rejects over here. I just find we sort of magneto around that. That's just see kind of pause over here a little bit. You get a bounce over here a little bit. We've played this line many times before. 3 over here, 1 over here. And when we extend below it, we keep coming back to it. And when we extend above it, we keep coming back to it. So that's just been sort of a recent trend that I've seen. I drew it as yellow because it's not as perfect as if it were a blue. That's just sort of my trading strategy to differentiate the lines that I have. Yellow is like, this looks like something that's going on. Like one that I saw as well that we traded on. This was a rougher trade. I only made $800 on this trade. I was up like 5,000 or 6,000 at one point. And I kept holding it, and I got out at positive 800. But it was this trade line right here, 1794. When we rejected off of that line, I closed and then it dropped all the way down to like $16 or whatever. So this I think is becoming a more important line, though we'll see. We kind of touched it a little bit over here. So we'll see what happens with Robinhood. Clearly, we're moving up a little higher now because of the momentum movement that we're getting over here at GME and AMC. GME line today that I'm watching personally for trades is right here. It's where we're sitting right now. Basically the 52.40-ish line right about there. I'm trying to break through on that now. So that's another one that I'm watching. So we'll see. I'll do one last check here on Enphase, and I'll give some final thoughts. This no man's land, not ideal. Remember, I'm a big fan of playing the lines. An easy one today, I didn't play this one, but it would have been an easy one, is when we extended above 19. I was looking at it, but I usually don't like trading the first 15 minutes, so I did not trade on it. But I was watching it, I'm like, ooh, extending above 119, that's going to pull back. Sure enough, pulls back, breaks the 119. Look at that. Right down to our 113 line and comes up. And that line's been there for like ever. 113.40 is the line. So I like playing the lines. And I don't know if we're going to have enough momentum to really push Tesla higher than this. It's possible, but I don't know that we're going to make it to 183 today before CPI. Now, if we get a bullish CPI, we'll push right up to 183 tomorrow. But I don't know that I want to bet on a bullish CPI, and that's why I'm going in a little hedged, especially with that PPI data we got this morning. If we don't get as generous of a revision, we might be a little screwed on CPI, but we'll see. JPow still, keep in mind, thinks that there's a good chance we're going to see a downward move in inflation in the second half of the year. So that's JPow's take, is the second half of the year ends up giving us the bullish inflation read. Now let me see what the suits are saying, if there's anything on JPow from what the suits are saying. Sometimes you could get something from Nick T. If you don't follow him yet on Twitter, I'm a big fan of him, X. He's a good guy. And we have any tweets from him? 55 minutes ago, no meaningful change in the economic outlook since Powell's last comments. No meaningful change in the outlook today. Key line, we're just going to have to see where the inflation data fall out. So Nick T, other takeaways, Powell maintains policy is tight by many measures. The policy rate is restrictive. The question is it sufficiently restrictive? And that's going to be a question that time will tell. We do not expect this to be a smooth road. These are some of the similar summaries that we got. Balance of risk, no timetable for cuts. He used to, by the way, say, we'd like to cut this year. We didn't see that here. Now, if I go into the probability of rate cuts in December, we're sitting at about 1.75 right now. So we've been somewhat stable there, and tomorrow's CPI is really going to move us into one direction or another. So that's Nick T, a little bit from the suits as well, and broadly we got a little bit of that post Powell rally here as expected. How we go into the close, I think will be tenuous again until CPI. Keep in mind that CPI tomorrow is like the last big catalyst for a while. I mean, you got NVIDIA earnings coming up, and obviously those will be a big catalyst for AI. But I mean, I'll read off the catalyst to you. Quick reminder: the first catalyst after CPI and retail sales tomorrow, which CPI we've already gone through. Retail sales are expected to come in. Advance 0.4, X Auto 0.2, X Auto Gas 0.1. So low expectations on retail sales. We could beat that. You do not want retail sales to come in negative and CPI to come in hot. That'll freak people out. That'll be a stagflation trade. The hedge will pay off tendies on that one tomorrow if that happens. Stagflation is not what you want after tomorrow. After tomorrow, so after CPI retail sales, the next catalyst will be the expiration of the coupon code, 11:59 p.m. tomorrow. Remember, we just, while we JPow traded, pulled off this almost $69,000 profit. That's a realized P&L for today on 2 trades we placed, one on Spirit Airlines and one on Tesla. So if you want those trade alerts, make sure you're part of the Stocks and Psych group, and you'll get all of those trade alerts. No guarantees we can always print, but let's just say we've had a really good last 30 days. It's been killing it. So knock on some wood. Okay. And email us if you have questions at staff@meetkevin.com, but that expires tomorrow. Most people who email us, they just want to bundle up. They say like, hey, you know, I already have a course. I want the real estate course, or I'm in the real estate course. I want the stocks one, whatever. We're going to get initial claims on Thursday. 220,000 is what we're expecting. Continuing claims, 1780 is the expectation. Those will be slightly softer than what we got last week, so we'll see. We'll also get housing starts expected to be up 7.5% month over month, so we'll see if we get that. That'll be tomorrow. We'll get import and export prices tomorrow, so we'll get a lot of price data tomorrow. All of that, by the way, sorry, that's Thursday morning. All of that over the next 2 days, all at 5:30 a.m. So if you haven't yet subscribed to the Meet Kevin Market Live channel, make sure you do that. Meet Kevin Market Live. You can actually download the Meet Kevin app in the iPhone Apple Store and get notifications if you'd prefer to have that all in one place. And we're going to make sure that comes back up again on Android as well for those green textures. You got to have green respect too. So those are the really the big catalysts coming up. After that, if I go into next week, I get, you know, PMIs, University of Michigan consumer sentiment. That's all a little boring, honestly. None of those are like mega catalysts. Really, the next mega catalyst, I mean, frankly, it's NVIDIA. I mean, we'll get Walmart on Thursday, John Deere on Thursday. We'll get JD, but Baba missed. So not great there for Chinese sales. Palo Alto Networks, Lowe's and Macy's next week. Toll Brothers, Target next week. NVIDIA and Snowflake, mark your calendar for May 22nd. That's a week from tomorrow, a week from the expiration of the coupon code. That'll come out. We'll also get into it at the end of next week. And honestly, then we're kind of chill on catalysts. We don't have the next FOMC meeting until, I think it's the third week of June. Oh, the second week of June. June 12th. And then the next jobs report should be the first Friday of June, which is June 7th. June 7th, we'll get the first jobs. Actually, I think that's the second Friday because the first Friday might end up on the first. Let me see here. Nope, it is the first Friday. Yeah, first Friday, we'll get the jobs data. So honestly, after tomorrow, we're kind of just twiddling our thumbs until NVIDIA next Wednesday, and then jobs on the 7th, and JPow on the 12th, and then, of course, we'll have CPI again, which you may as well write that one down. CPI release for June should be like June 12th as well. It is. On Fed Day, you get the May inflation data. On Fed Day. That's going to be a wild day. But that's all down the road. So anyway, yeah, that gives you an overview of everything that JPow just said, my thoughts on the market, my thoughts on hedging. And again, if we could get non-stagflationary numbers tomorrow, maybe I'm being too bearish. Remember, I've been mega bull since like November of 2022. Nike swoosh volatile recovery, you know, everything moon. Up until about the last 6 weeks. I try to be as transparent as possible on the channel. I love all of you who support me and always come back. So thank you for that. I'm not always right. I try to give you my opinions. And I'll tell you, every freaking turn, JPow, late like this year, he just keeps trying to go for the bullishness. I don't know. Like, I think he already knows what the CPI data is tomorrow. And I don't think he would have been as bullish today if the CPI would have been bad for tomorrow. So I'm like a little nervous that my hedges are just gonna get burned tomorrow, but I'd also be really pissed if I closed my hedges and then we got a miss, because then I'm going unprotected in tomorrow. And remember, folks, always use protection. And get life insurance in as little as 5 minutes. Did you know they were a sponsor of the channel? I just finished this at the beginning of the video. I say that because sometimes people get mad at me in the comments. You're like, Kevin, it seems like your cup is empty. You're right. Right now it is empty. But anyway, make sure you get life insurance in as little as 5 minutes by going to metkevin.com/life. Paid partner of the channel. Anyway, with that said, let's push a button here.
Go yourself. Is that clear?
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Look at that VWAP move. Look at that. Double reject on the VWAP for end phase, playing the VWAP. Wow. That's definitely algorithmic. Anyway, thanks, folks. We'll see y'all in the next one. What if you want a quickie? Wrap your sticky? Stop. No, I've never heard of that before. I can't unsee that. I gotta go.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.